Welcome to the press conference call for the January edition of the Philadelphia Fed's Manufacturing Business Outlook Survey. Today we will learn what manufacturers had to say about business activity for the month of January. I'm Danielle Mazzone, Media Relations Representative at the Federal Reserve Bank of Philadelphia, and I'm joined by Senior Economic Analyst Mike Trebbing. Mike will start our conversation with a quick overview of this month's survey, and then we will take calls from Dow Jones reporters Scott Calvert and Ben Lubsdorf.
Our regional survey's broad diffusion indexes suggest modest growth in the manufacturing sector this month and a growth rate slower than December's. The indexes for current general activity and new orders decreased notably but remained overall positive. Firms reported declines in shipments this month and declines in labor usage. The survey's price indexes suggest continued moderating price pressures, in particular from lower energy prices. Manufactured goods prices were nearly steady, however, this month. Firms' expectations for the next 6 months remain overall optimistic, and the broad future indicators have remained near their current levels for the last 4 to 5 months. And I'll note that these supplemental questions this month, firms were asked about the impacts of lower energy prices on their businesses, and while the impacts were broadly viewed as net positive, the responses were different depending on the dependence of connections to the energy industry or energy-related customers.
So Scott Calvert from the Wall Street Journal, why don't you pose some questions to Mike, if you have any?
Yeah, I just wanted to see if you could maybe elaborate a bit on the effect of lower oil prices. You said it's generally been positive, but it sort of depends on what kind of connections companies have to the energy sector. So maybe could you just elaborate on that a little bit?
Right. Well, as I mentioned in the summary too, we've had this sliding down of the price pressure measurement on the input prices, and of course we assumed that was related to energy, and of course the large reduction in the price of oil in 2014 and further in 2015, we decided to ask this question that we had never asked before. So in general, when we asked them about overall impacts on their business, we had a large share of firms, 63%, saying that the net effects were positive, and then 63%, and it was broken down into slightly positive, 39%, 14% modestly positive, and 10% strongly positive, and then the other 15% were in the 16% were in the negative category. And then we asked them a little bit more detail about the nature of the impacts, in as much as the price reductions can manifest themselves in different ways, and we had some categories that they could respond to, and of course, as not unexpected, we had 57% of the firms indicated that the benefit was in lowered costs of production, and then we also had of interest, about 23% had indicated that it had increased their sales margins. But related to what I made in the earlier comment about their relationship to energy customers, we had about a third of the firms indicated that they had seen decreased demand from energy production related customers. On the other hand, increased demand from non-energy production related customers of about 10% of the firms. So we know in our we have a broad mix of manufacturing firms in our district, and many of our respondents are attached to the energy markets in some ways. Everything from supplying drilling equipment and safety equipment and concrete manufacturers that produce for drilling platforms. So, but on balance, we're seeing net positive effects. But we realize too that there are some manufacturing firms that may see some reductions in energy related outputs.
Mm-hmm.
We also asked them about their 6-month forecast, about what they would expect for overall demand for their products. And of course, we didn't ask what their forecast was for energy prices, but the firms were evenly split between those that expected increases in demand for their products and those that expect decreases in demand.
Anything else, Scott?
Well, that should do it. Thank you very much.
Mm-hmm.
Ben Loopsdorf, you've joined us?
Yes, I did. Sorry, I got dropped earlier.
Yeah, we apologize. I think it was on our end. Do you have questions for Mike?
Well, this is probably what you were just talking about. I'm sorry I came on late. But could you, I saw in the oil question that there's quite a few people saying that they're seeing less demand from energy producers, but that their own costs are going down. It seems like that overall was pretty positive, but how much divergence is there beneath the surface in terms of the effects of oil?
Yeah, I think, as I mentioned, you may just come in late, but overall the firms are saying, over half of them are saying that it's reduced their cost of production, which isn't surprising. We did ask questions about demand and realizing that many of our manufacturing firms are producing for the energy markets. We did find a third of the firms that indicated that they'd seen decreased demand from energy production related customers, and that could be anything from energy producers to the firms that are supplying capital goods or other equipment, maybe to energy related customers. So it's a mixed bag in that regard. And as I mentioned at the end, we did ask about their expectations going forward for what the impact would be on demand for their manufactured goods. And there we saw an even split between those that were expecting increases in demand over the next 6 months and those expecting decreases. And as I mentioned, we had them make that assessment based upon their own assumptions about energy price direction in the next 6 months. So I think there's a lot of uncertainty about that, and probably is why we had such a large split.
All right, thank you very much.
Thank you, Ben. The next Business Outlook Survey, Manufacturing Business Outlook Survey, will be released on February 19th. Thank you.